Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Far East Horizon Limited annual report. Far East Horizon Limited offers a diverse range of businesses and services across various industries. At the core of their operations are financial services, including direct finance leasing, sale-leaseback, factoring, entrusted loans, operating lease and advisory services. The company also provides industrial operation and management services, encompassing engineering and trading, operating leasing, and ecotechnology. In addition to these, they offer medical and education services, information technology, and investment management. Their services extend to various sectors such as healthcare, cultural and tourism, engineering construction, machinery, chemical and medicine, electronic information, public consuming, transportation and logistics, urban public utility, and more. Furthermore, the company engages in import and export trade, domestic trade of medical equipment, ship brokerage, and trade agency services for the machinery industry. Their expertise also includes hospital and healthcare management, education consulting and management, and provision of related equipment and materials. Overall, Far East Horizon Limited's extensive range of businesses and services makes them a significant player in the market. The stock prices of various Phi Hori and Unitrek entities have increased significantly over the past year, with some rising by as much as 31.1%. However, it is unclear what specific news events or factors have contributed to these increases. One possible explanation for the rise in stock prices is the overall performance of Far East Horizon Limited, 3360HK, a publicly traded company based in Hong Kong. While its own stock price has not exceeded a one-year increase of 31.1%, it is likely that the associated financial instruments, or bonds, issued by the company have performed well. Other entities with similar names, such as 2810 ETF and First Energy Corp. FE, have also seen significant increases in their stock prices over the past year. However, these companies are distinct from Far East Horizon and its associated products. In summary, while there is no clear indication of what specific news events or factors have caused the stock prices of Phi Hori and Unitrek entities to increase by 31.1% in the past year, it is likely that a combination of factors, including the performance of Far East Horizon Limited and other related companies, has contributed to these increases. Far East Horizon Limited market capitalization of $36 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Far East Horizon Limited holds a significant advantage in their industry. Far East Horizon Limited trades at a lower price-to-earnings ratio of 8 times and a higher price-to-book ratio of 0.62 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Far East Horizon Limited itself. The company exhibits a very high leverage profile, with liabilities accounting for 84% of total assets. This elevated debt level warrants heightened caution, as it may limit the company financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 7.36%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline are multifaceted and varied across different sectors. On the growth side, financial services play a significant role, with interest income from inclusive finance business and advisory services experiencing substantial increases. The expansion into overseas markets has also contributed to revenue growth, as seen in the 4.2% year-on-year increase in 2025. Furthermore, various emerging industries such as technology finance, green finance, and new energy sectors have driven revenue growth. Large-scale equipment upgrades and consumer goods trade-in programs have also had a positive impact on revenue. Additionally, major national strategies and security capacity construction in key areas have contributed to revenue growth. On the decline side, financial leasing industry contraction has led to a 3.25% year-on-year decrease in balance of financial leasing contracts. The equipment leasing industry domestic market challenges, including sluggish demand, price competition, and lengthened return cycles, have also resulted in revenue decline. Industrial operations segment and certain business segments such as Horizon Construction Development and Horizon Healthcare have experienced significant declines. The Chinese mainland has seen an 8.1% revenue decline, while Malaysia has witnessed an even more substantial decline of 582.5%. These drivers highlight the complexities and challenges faced by businesses in different sectors and regions. The company is generating positive operating cash flow. This can be seen in multiple pages of the extracted summaries, where it is consistently stated that the company has a positive operating cash flow. For example, on page 25, it is explicitly mentioned that the operating cash flow is positive. Similarly, on page 50 and page 90, it is confirmed that the company is generating positive operating cash flow. The data also supports this conclusion. On page 179, the operating cash flow for both 2024 and 2025 are provided, with a slight decrease in 2025 compared to 2024. However, on page 348, the operating cash flow for 2025 is significantly higher than that of 2024, indicating an increase in positive operating cash flow. Furthermore, other indicators such as the provision for accounts receivable decreasing by 52.41%, page 35, and the net interest earning assets after provision increasing by plus 4.49%, page 40, also suggest a positive trend in the company's operating cash flow. Overall, the evidence suggests that the company is indeed generating positive operating cash flow. The company's debt level has undergone significant changes over the past year. According to the provided summaries, total financial liabilities have risen by approximately 27% from RMB 271,357,233 in 2024 to RMB 297,072,697 in 2025. Furthermore, interest-bearing bank and other borrowings have increased substantially by around 1 billion RMB. The increase in debt level is accompanied by a substantial rise in interest expenses. Although the exact figures for 2024 are not available, it is evident that interest expenses have skyrocketed in 2025, with a staggering plus 8,177.619% change from RMB 112,751 to RMB 9,210,370. This significant increase in interest expenses suggests that the company's debt level has become more burdensome, resulting in higher costs for servicing its debts. Overall, the available data indicates that the company's debt level and interest expenses have undergone substantial changes in 2025, with a notable increase in both cases. The company's performance can be analyzed based on the various segments and regions it operates in. On a positive note, the principal finance business, Horizon Construction Development in overseas markets, financial services, and hospital operations have shown significant growth. The financial services segment saw a revenue increase of 4.47% year-on-year, while net interest-earning assets rose by 4.38%. Additionally, asset quality improved with non-performing assets declining to 1.03%. The Horizon Construction Development in overseas markets also performed well, contributing RMB 1,402 million in revenue and RMB 135 million in profit. Financial advisory and other business operations also saw a significant increase in segment revenue. However, some segments have underperformed. The Horizon Construction Development's domestic operations continue to face pressure despite efforts to improve asset allocation and deployment. The industrial operations segment has seen its total revenue decline due to market conditions. Furthermore, the equipment operations segment reported a negative revenue of RMB 62 million. In terms of profitability, three segments, financial services, equipment operation, and hospital operation, have reported negative profit after tax. The financial services segment was impacted by impairment losses of $822,683, while the equipment operations segment incurred other expenses of $522,764. The hospital operations segment faced finance costs of $351,842. Management's outlook on Horizon Healthcare is cautiously optimistic, citing strong resilience and development potential in certain segments. The company aims to maintain its leading position in sustainability assessments and ratings while expanding into non-medical insurance services. To achieve this, management is focusing on integrating global resources for industry development, strengthening preemptive risk management across all stages, and enhancing risk prevention and control capabilities. The company's strategy involves concentrating on core regions and expanding into neighboring markets, with a focus on national key economic belts and core cities. Management is also pursuing differentiated business cooperation based on local financial development needs and deepening the cultivation of high-quality customer bases to foster asset development. In terms of risk management, Horizon Healthcare is strengthening its preemptive risk management capabilities and implementing refined strategies focused on key industries, regions, and customers. The company's financial situation is strong, with a net liquidity gap of RMB 39.95 billion as at 31 December 2025, allowing for continuous investment in growth initiatives. Overall, management strategy emphasizes the importance of safe and stable operations under its Finance plus Industry development framework, while pursuing global expansion and diversification into non-medical insurance services. Concerns about inventory buildup or supply chain disruption are evident in several industries. In the engineering, construction, and healthcare sectors, there is a growing concern about potential disruptions. The chemical and medicine industry is particularly vulnerable to these issues. The chemical and medicine industry faces significant challenges due to fluctuations in raw material prices, rising environmental compliance costs, and delayed procurement strategies. This has led to lower inventory turnover efficiency and a backlog of unsold inventory. Furthermore, the industry has seen a notable decrease in substandard assets from 2024 to 2025, indicating potential supply chain disruptions. The buildup of inventory is also a concern within this industry, as highlighted on page 325. These issues have significant implications for businesses operating in these sectors, including squeezed profit margins and reduced competitiveness. That concludes the financial summary for Far East Horizon Limited. Feel free to comment below, and I will be happy to answer them when possible.